Powell is no Paul Volcker. No, Powell is more like Rudolf von Havenstein, I would say. He was the guy in charge of the Reichsbank in 1923. Thursday, March 21st, 2024, Monaco 64, home of alternative economics and contrarian views. So the chairman of the Federal Reserve blinked and announced the slowdown of quantitative tightening fairly soon. And I think that's highly significant. And that's what we're going to look at today. Before we do, though, I like to say you need to consider, in my opinion, the dirty man safe more than ever. And why is that? And of course, the dirty man safe is a very good way to hide some of your valuable assets. Well, I saw this article yesterday on Zero Hedge, and it says, this is an attack on America. Kevin Leary blasts Letitia James for a possible seizure of Trump assets. The fact that if they can go after former president's assets on trumped up charges, and I guess the pun is intended there, they can go after anyone. So I think it makes sense to have a dirty man safe these days. You can use promo code Monaco10. You get a 10% discount. And of course, you don't have to put everything in there, but it's an option. It's a strategy to keep things diversified in the real world. So if you want to learn more about the dirty man safe, just go below in the description and click on the link. So back to the Federal Reserve. And I've been speaking about the last few weeks of the fact that, and also for the last few years, I think the central bankers have tried their darndest to try to rein in the inflation that they created themselves. And people like me and others in the alternative, in the gold bug world, in the sound money world, have always said that they had no way out. And I think we're very close to where they choose the collapse of the currency. And this doesn't mean the collapse of the dollar versus the euro or the pound or the yen. No, it means the collapse of all fiat currencies, the dollar included, versus real money, i.e. gold and silver. Don't be distracted by the dollar index. The dollar index, it's gone from 100 when it was created in 1973 to where we're now, which is just around 100 as well, while gold has gone from $85 to $2,200 as I speak here. So that's how they're going to lose out. And I listened to the press conference late yesterday afternoon, London time. Yeah, and there were a lot of important things he said. But for me, I thought this was really important, that I even tweeted it out at 6:39 p.m. London time. He started out at 6:30, or actually 6:31. He was about a minute late because I was waiting on the Fed's YouTube live. And this is what I said. Powell says FOMC looking to slow the pace of QT soon. Actually, he said fairly soon. I think this is significant, I said. Gold at the time hadn't really broken out, or the stock market hadn't really pumped up. And Barron's caught on to this. Barron's magazine. It says Fed could slow pace of quantitative tightening fairly soon. Federal Reserve officials discussed slowing the pace of the central bank's balance sheet reduction at their March monetary policy meeting. Chairman Jerome Powell said Wednesday. He said it would be appropriate to begin tapering so-called quantitative tightening fairly soon. The Fed began QT in mid-2022 by allowing its securities holdings to mature without reinvesting the proceeds at a pace of $60 billion in Treasury and $35 billion in mortgage-backed securities per month. The balance sheet has been reduced by over $1.5 trillion since then. So that is a lot, $1.5 trillion. But don't forget, we were I think around $3.5 trillion in 2019 before they goosed it up to almost $9 trillion. So it's still inflationary where we are. So this is a part that's quite important as well, that Barron's talks about here, or writes about. By decelerating the pace of QT, there would be less potential for financial market stress, Powell said. So he is concerned about the financial markets, even though he says that the objectives or the goals that the Fed is given by Congress is to maintain price stability and low unemployment to keep the economy going. But here he shows his true colors, that he's really there to look after the interest of the top 10% of Americans who own about 70% of the wealth. And of course, you might be in that 10%, and I might be in that 10% here in the UK. And it might sound very good in the short term, of course, but in the longer term, all this does, this inflation that the central bank creates, is make the whole of the country poorer, and it will eventually turn the United States and the UK, because the Bank of England is going to do the same thing, into a third world country. And I remember Brazil very well when I was growing up, and I was lucky to be on the right side of things, but it's not a nice place to live in when you have to watch your back all the time, when you have to see mothers with their little children outside restaurants begging for food. And when the majority of the public is dirt poor and all the wealth is owned by a few people. I'm not a socialist, and I don't want to see wealth redistribution. But what I'm for is for a sound money system where you cannot inflate the currency out of thin air to benefit the people at the top. And this is what we have here. And Powell just showed his true colors, in my opinion. So Barron's ends this by saying it doesn't mean the balance sheet would shrink less than it otherwise would overall. However, it might just take longer to get there, Powell added. Yeah, he tried to give some reasoning that it, by slowing down, would make it easier to unwind. I think he was full of BS there. I think after they slow down the QT fairly soon, and someone asked when is fairly soon, he said fairly soon. But the next step after that will be to actually stop it, and then very soon after that, or fairly soon after that, they'll start doing QE again, printing again, because they're concerned about market liquidity. And what that has done is that's shown speculators, investors, that the Fed's not going to allow the financial markets to, it might allow them to correct, but they will not allow another March 2020, another 08 crisis, another dot-com bubble bursting. They're going to be there right behind providing liquidity. And that's why we're seeing the S&P trading up like there's no tomorrow, rocketing up, making new highs yesterday. The NASDAQ, the Dow, the price of gold, cocoa, and I think it's going to continue. Is that a healthy thing? No, it happened in Germany in the 1920s, the stock market went through the roof. It happened in Venezuela recently. It happened in Zimbabwe. It happened in Brazil in the 80s when we had high inflation and hyperinflation. The financial markets kept doing really well. The top 1% were raking it in, while the general public was destitute, struggling with the cost of living. And that's what's going to happen, unfortunately. And hopefully you have protected yourself financially well enough, and just not just financially, but spiritually and in other aspects like prepping, because I think things are going to get worse. And the melt up, I think, is really beginning, or the crack up boom, which I spoke about recently. Hasn't taken long for it to really manifest. And that's what gold is telling us. And the stock market is a dangerous place as well, though. And I think what gold and hard assets will do is that they will go up much, much faster than financial assets. And that's how they will inflate their way out of trouble. And that will also be a symptom of the fact that big investors, people with a lot of wealth, they will want to diversify. And gold, silver, commodities, they've been neglected for a long time. And I'm not even talking about de-dollarization here. You can add that to the equation as well. The fact that the physical gold and silver market, they're moving east. Last year in the beginning of December, when gold spiked above 2,100 overnight on a weekend, that followed the fact that the Shanghai gold price was at a huge premium to the London, New York paper price. And I think that's continuing. I think the price setting is moving east to China. And you're probably wondering, where do you think the price of gold's going to go, Mario? Really, if you've been patient over the years, if you've been stacking and patient through the ups and downs and sat and waited, and if you know what's really coming, my strategy is to sit tight, keep an even keel, and only get rid of your gold and silver if you need to. If you need to diversify, if you have an emergency, that's the way I see it. Can you imagine if you were in Caracas in the beginning of the hyperinflation and gold had made a new all-time high and you got rid of it, only for 6 months later see it multiply hundreds of times? You would have been kicking yourself. I'm not saying this is going to happen, but that's the kind of environment we're in my opinion. So yeah, let's go check where the markets are then. It's 8:19 a.m. London time. We've got spot gold up $19 at 2,205. Yeah, it feels strange saying that price, but yes, it is above 2,200. The high last night, and when COMEX reopened, the futures reopened last night London time. They reopened at 10. Usually they reopen at 11, but you guys have moved forward your clock. We haven't yet. And it opened below 2,200, and I wasn't really watching. And then I looked at it again, and it was above 2,200. I was saying, what's going on? It just zoomed up after it opened, and it got up to 2,223. The low has been 2,181, and I expect to see a lot of volatility. Silver did really well as well, although it's pretty much unchanged right now. It's at 25.60. 26 will be a very important technical level as well. The high's been 79, the low has been 25.52. Well, melt up in the stock market continues. The Dow is up 142 points. The NASDAQ is up 150. S&P is up 24. Why are they even talking about cutting rates? Yes, and they came out yesterday saying that they will cut 3 times later on this year. It's just goes to show how cornered they are. Currencies, yeah, the dollar, as I said, don't get too distracted between about the value of the dollar versus the other fiat currencies, because we made all-time highs in gold and pounds, euros, Swiss francs, Japanese yen, Aussie dollar. So that's all you need to know. As I've said for many years, even before I started this channel, fiat currencies are all sinking and eventually they'll go to zero. So I won't go through them right now. They're pretty much unchanged versus the dollar. Crude oil is up slightly at 81.50. That's WTI. Brent is up a third as well, just below 86. High-grade copper is up 1% at 410. And cocoa as well is continuing to move higher. Cocoa, I think, let's see, it got up to above $8,100 per ton. So yeah, cocoa's still going to the moon. Right now it's 8,075. It's up 7%. The bond market, of course, didn't really do much yesterday. And some people might say, oh, you're saying that rates are going to go higher, bond yields. And I think they will eventually. But the fact that the Fed said they want to slow down the QT helped the bond market. And that's why the 10-year yield is still here around 4.25. It hasn't broken through that 4.33. And I think the Fed thinks that it's important to keep bond yields lower, especially with Japan saying that they're going to tighten, which is a bit of a joke, but psychologically it affects everyone. And why would the Fed want to keep bond yields lower? Well, because we saw last March that the regional banks, SVB, they collapsed because the value of their bond holdings went down. So I think the Fed is very concerned that if we see yields keep moving higher, the balance sheets of these banks are going to get even worse, and that's what it's all about. So there you go. Powell is no Paul Volcker. No, Powell is more like Rudolf von Havenstein, I would say. He was the guy in charge of the Reichsbank in 1923. So there you go. With that, I'm going to wish you all a very good day. And yeah, take care. Bye.